Welcome to By the Books, the podcast helping business owners navigate the complex world of business, tax, and bookkeeping. Now, to the owner and president of Segregation, Lindsay Klein.
Thanks for joining us, everyone. This is Lindsay Klein with Segregation, honest, accurate bookkeeping performed on time, and your host of By the Books. I'm here today with a guest I'm super excited about, Susan Bryant, who is the principal of MB Group, a CPA firm located in this area based out of Plano, Texas. Thank you for joining me today.
Well, thank you so much for having me, Lindsay. This is really exciting. It's a pleasure to be here.
You're one of those people that as soon as I met, I immediately gravitated towards, and somebody that I'm hoping one day you'll be my mentor, because I feel like I can learn so much from you.
Wow, that really means a lot. Yeah.
And I can tell just by the way you run your business and the way you speak of your employees and your clients that you're someone that just is a genuinely good person that wants to help people, whether it's an employee or a client. You want to improve people's lives, and I love that.
Thank you. That really, those words mean so much to me. That kind of gets me a little choked up. I really appreciate that, and I thank you for being so generous with your compliments. So we definitely try to do our best. One of our core values is caring. We just have to care. We have to care, especially as accountants. I mean, it takes a lot of effort. And so this is a calling. I tell people all the time who come and work for us as, accountants, is that this is never going to be a job. This is never going to be a career. It really is a calling. It's something that's placed on your heart, and you got to feel it.
And just that right there is so unique, what you just said. I have not heard, I don't think, a single accountant talk that way. How many accountants talk about heart and caring? You know what I mean?
Yeah.
It's rare. And I spotted that in you right away, for sure. And in this industry, I'm sure you know, a lot of my bookkeeping clients ask me for referrals for tax preparers. And the number one complaint I hear over and over and over is customer service issues.
Oh, yeah.
It's almost never issues with they didn't know what they were doing or they didn't get it on time. Sometimes it's that.
Yeah.
But typically it's, I can't get them to call me back. They don't treat me very nicely. It's customer service related stuff.
And you think we would get that right. It's really interesting. I feel like there's almost a revolution that's coming in our industry.
You think so?
It's coming. It has to. Talent will not stay. And good talent will not stay in this industry. They'll go. There's plenty of other opportunities for fabulous accountants to go and do other things. The hours are terrible. The culture is bad. The service. So we've got sort of practitioners, they're running their businesses like CPAs instead of like business owners. And so eventually there's going to be this shift. It's coming. It has to. Otherwise, there's just surely not going to be enough people to do all the work that needs to get done. I mean, I'm sure you know this. I mean, there's so many business owners. And you drive around just in the Dallas-Fort Worth area. I mean, there's thousands of businesses, in a 10 square mile radius. They all need accounting work. They all need tax returns.
Yep. You're right. Absolutely. And you have kind of a unique way that you look at your clients and business in general, in that you're not just contacting your client at tax time. Like, you want the full scope. You want to help them all year long.
Oh, man. Boy, do we. Well, there's a few things about this. So first off, we are advocates of accounting. Anybody who comes to us and they don't have routine, regimented, disciplined accounting policies and procedures, we've got to reform them. They have to be reformed. It's not a business. It's just a tax write-off. And that's a completely different mentality. So we want to get the business owner thinking like a business owner. And the first way to do that is to implement the accounting. We've got to get you looking at your numbers, knowing your numbers, understanding your numbers, actually looking at the performance. There is nothing more exciting than a big profit at the end of every month to get a business owner psyched up and ready to go.
Yes.
I mean, it's exciting.
Absolutely.
Now, when we kind of fast forward to tax planning time, and then all of a sudden they have a tax bill, they get a little deflated. I mean, it's natural. But it's really important to take the accounting information and push it over to the tax, take off that accounting hat, put on the tax hat, and really think about how can we mitigate the taxes? What are strategies we should be implementing? It's not an afterthought. It is something that is proactively done and refined as your business continues to grow. So
what are some examples of some strategies that you use for tax planning?
Oh man, I think we've got like 100 different ones.
Really?
So, yeah.
Wow.
Yeah. So we've got actually a nice little format that we use where we actually, my team, they will go through and think about all of these ideas, and we'll make a checklist of all the things we want to talk about with the client. Things that could be applicable, anything from adding your kids to payroll, implementing a different retirement plan, whether it's a 401k or a defined benefit plan. It could be buying real estate, like commercial real estate, being owner occupied, benefiting from cost segregation study, R&D tax credit, all the things of late, the CARES Act, the employee retention credit. We will go through every single line item looking for what could apply to this particular business.
Fantastic.
And business owner, because ultimately most of these are privately held, owner-operated businesses where they're pass-throughs, S corps or partnerships, sometimes Schedule Cs, right? Mm-hmm. And so the owner is ultimately the taxpayer. So, we have the ability as accounting professionals to literally change someone's financial future.
Yes.
That piece to me, I feel like accountants are so busy working in the past, a lot of times hung up on the compliance issues, and all that stuff's important. Don't get me wrong. It's got to be done. Accounting is important. The tax returns are important. But I think we're missing the boat a lot. And this is sort of another one of the things in the profession that has to change is we got to start being future oriented. We're going to think about what's coming, not just what's happened.
Right. Let's drill down on a few of those strategies.
Okay.
One of them you mentioned was putting your kids on payroll.
Yeah.
And I've had this come up a couple of times in the past, and have even suggested it to a couple of my clients. Essentially, the strategy there, correct me if I'm wrong, is you can pay your child up to a certain amount tax-free, correct?
Yep. That's right.
$12,000, is it?
It's $12,000. Yes.
Okay, as of right now.
Yeah, and they need to be paid from your family office on your Schedule C.
Okay.
So not out of your S corp, not out of your partnership.
Okay.
Paid
Now,
from your
why
Schedule
that
C.
distinction?
So that's just a distinction in the tax code, the way that it works. And so if you were an employee of an S corporation, you're subject to Social Security and Medicare tax and FUTA tax. But if you pay your kids out of your family office, your family business on your Schedule C, you're exempt. Your kids are exempted from the Social Security, Medicare, and FUTA.
Really? Okay, I didn't know that.
Yeah.
Interesting. Okay.
So, and you don't even really have to do a W-2 either. Most people end up doing a W-2 for the kids, mainly because they want to make a Roth IRA contribution.
Okay.
Which is sort of a powerful thing if you think about it. We're taking pre-tax money and putting it in an after-tax retirement account.
Okay.
That sounds almost like magical. This is stuff that gets accountants all excited. Like, what? Pre-tax and then after-tax? What? We'll never pay tax on it ever. That's remarkable that you can even do that. And it's totally unleveraged. Now, are there rules? Absolutely. Do your kids really have to work for you? Yes. Do you really have to make them do a job? Yes. Do you have a job description for them? Yes. Does it have to be? Are we compensating them fairly? We need to ask all those questions. So there are parameters, as there is with everything in the tax code. But the great thing is that it's available for you, and you should at least be exploring it.
Okay. Yeah, that's a good idea.
So even if you don't do the whole 12K, maybe you're doing 4K, 8K, something.
Okay.
Think about what it is you could pay your kid.
Okay.
Pay them.
So then going down to the retirement accounts, how can people, business owners specifically, how can they utilize retirement accounts to mitigate some of their tax liability?
Yeah, retirement is fabulous. So, there's sort of these tiers, if you will. The IRA, everybody knows about the traditional IRA. Most people make too much money as business owners. They're going to be exempted from even participating in that, right? Not allowed. And then you kind of work your way up to the SEP, the self-employed person's IRA. A lot of people, there's a lot of business owners who love the SEP, especially if they have just a few employees. I think it's terrible. It is very expensive from a self-employment tax standpoint.
Interesting.
And for you to do the max contribution, you've got to pay yourself, close to $300,000 a year in wages. That's a lot of Social Security and Medicare tax.
Interesting. Okay.
Yeah. So I think a lot of people navigate that direction or migrate that direction because setting up a SEP IRA is easy.
Okay.
There's no compliance requirements. You don't have to have a plan document or a Form 5500, like a 401k. but it's just not tax efficient.
Interesting. So what do you recommend usually instead?
I recommend a 401k always, because you can pay you and your spouse, and you can immediately achieve with a little amount of payroll. Right now the maximum is $20,500 for the year 2022. I mean, you can pay somebody less than $25,000 and almost all of it goes, is pre-tax. That's pretty powerful. So imagine doing that for you and your spouse. I mean, that's almost $50,000 in savings, and you're not paying anywhere near the self-employment tax that you were set just to get to $56K or $57K or whatever it is now. So now the 401k plan, if in the right situation, is paired with a defined benefit plan, a cash balance plan. So people often don't know what this is, but you have the ability as a business owner to set up a pension plan for yourself. That's essentially what a defined benefit plan is. So unlike a defined contribution plan, that's a 401k, where you know exactly what you're contributing now, a defined benefit plan says, based on your age and how much you're making, we need your benefits at the end of your working career to be X, Y, and Z. How much do we have to put in now to get that defined benefit? And so it's really, it's extremely powerful. I mean, we've got clients who are contributing $250,000, $300,000 a year to their defined benefit plan. It's insane amounts.
Is that tax-free?
So it's a deduction in their companies. So they move money from this pocket to this pocket and get a tax deduction. They kick it into this long-term bucket where it grows tax-free. And then at some point in the future, they're going to withdraw it for retirement purposes, just like they would from a 401k or an IRA, and they'll pay tax on it at that time.
Okay, so it operates similar to a 401k.
In that it's going to grow tax-free. So, but you get the tax write-off now. And for a lot of these business owners who are in extremely, high marginal tax brackets, to me, it's not necessarily the dollars that you're paying in tax. It's always the rate at which you are paying tax, right? So if I can get into a lower tax bracket, I mean, that's awesome. I'm shaving off, this huge amount of tax at a higher rate.
Right.
So that's where tax planning becomes strategic. I mean, we see all the time, people are like, I want to buy a car in my business. Yeah, that's awesome. But they'll buy the car in a year where they owe very little in tax. And then the next year they're going to owe a lot more in tax. And I'm like, we have to save these deductions for when they are the most valuable to us.
That makes sense. So that's probably part of your tax planning sessions too, is what big purchases do you need to make and when to make them? Absolutely.
Expense acceleration, income deferral, there's a variety of techniques that you're using all the time, right? And there's not like a one size fits all. There are some strategies that are more common, if you will, for business owners. But I mean, it's great when you can really work with a client and then all of a sudden you've got so many different strategies lined up. And I mean, they're racking up, $250,000, $300,000 a year in tax savings. I mean, it's
That's
remarkable.
Fantastic.
Yeah.
Now, another thing you had mentioned is real estate. How can business owners utilize real estate to lower their tax liability?
Yeah, so real estate is great. There are some limitations in the tax code. So if we are a business owner, the best way for us to purchase real estate would be commercial real estate that our business then occupies as a tenant. When you do that, then you're generally active in the real estate that you've purchased because you're the tenant in it. So that frees you up to take the losses associated with that particular building on your Schedule E on your 1040. That's usually where we see real estate owned by owner-occupied, businesses. The greatest thing about commercial real estate is that these buildings are so large, they're significant in value that you can perform something called a cost segregation study. So the cost segregation study is this very niche area of the tax code, which essentially allows you to say, let's break down and evaluate all the components of the building and break them into the respective tax lives. So 5-year property, 7-year property, depending on what that is, or everything else, 39-year property. Well, as you can imagine, in the cost segregation study, we're looking for 5-year and 7-year property because we're able to accelerate the depreciation of those particular types of assets so that we can create a bigger cash, non-cash deduction up front to save the cash tax dollars.
So on a big building, you could maybe take, what exactly are you looking for? Like fixtures, or what are you looking for to accelerate?
Yeah, it could be anything from cabinetry to flooring to, is the crown molding nailed or is it glued? I mean, it gets into that.
Interesting.
So there are it's very, very technical. And fortunately, there's experts who specialize in just that particular. Yeah,
there is.
And you've got to work with them, of course. But you got to know the
So if you don't break it all up, everything is 39 years?
39 years.
So basically, you're taking the cost of that real estate and deducting it on some kind of 39-year schedule.
Yeah.
Which is just a small amount per year.
Straight line over 39 years.
So whatever you can take out and depreciate in 5 or 7 years instead, whether it be cabinets or fixtures or crown molding, then obviously you can take a bigger deduction every year.
That's right, exactly. And some of this 5 and 7-year property, now, is bonus depreciation. So it's not just accelerated over a 5-year period. You're taking it all in the first year.
Ah, okay.
So, we'll harness the tax code to our advantage. That's the thing. We have to look for the opportunities. And then once we do, it's just tax savings for the client. So
that's awesome.
Yeah.
So what are some other good strategies?
So I would definitely say that we spend a lot of time looking at any type of federal incentive that exists. So like the employee retention credit of late. Mm-hmm. I mean, anybody who has a payroll in a business should have explored this. And if you haven't, it's not too late. You could still go back and do it. But if you meet the requirements for the employee retention credit, so if you were not an essential business, required to shut down as a part of the pandemic, or notice it's or you had a 50% decline in gross receipts, right? Or you had to make some significant changes to how your business operated due to the pandemic, you could be eligible. Be eligible. So, I mean, we've had attorneys who have, received, hundreds of thousands of dollars because they had to revise the way that they do business. You had to go from in-person depositions to Zoom depositions. That's a huge change in your business.
Right.
Huge change. So you may not qualify under the 50% gross receipts, decline, but you will qualify under we had to rework our entire business model due to the pandemic. So
that's
worth
interesting.
Exploring. Yes.
I didn't even know that was one of the eligibility options.
Yeah.
Very interesting.
Yeah, there's some really interesting things. Again, you got to talk to the experts. They're like way more informed than I am. But it's always worth a 15-minute conversation.
Right.
Do I qualify? If so, I mean, we've had clients who've gotten $1 million. We've had clients who've gotten $5,000. It's still free government money. Well, you get to pay tax on that stuff. It's not free,
right.
but close to free, right?
And then the R&D credits is another one that you had mentioned.
Yeah.
So that is something that probably not a lot of business owners know about. And it seems like maybe even some accountants don't know about it.
Yeah, that's true.
Or they don't pay attention to it, maybe.
Yeah. Well, I would say that it is... there has to be a significant amount of money invested in research and development. Usually that's in the form of wages, right? So people usually get hung up on like, well, I'm not spending that much on R&D. But if you start looking at the time your employees are spending, that starts to add up. And you can go back in time. So usually you're doing this 3-year look back to see how much can we go back and recapture for this initial period. A lot of times people will say, well, I had an app developed, but I had it developed in another country. That won't qualify, right? It's got to be like domestic contractors, salaries, and other expenses associated with some type of research and development. But and there has to be a technical component to it. So you have to have, generally you're going to have some type of engineer that's going to have some type of schematic drawing, or there's going to be something technical associated with the R&D.
Gotcha.
So, it's probably not going to be overly simplistic things, but it doesn't have to be new to the whole world. It just has to be new to you.
Okay.
Yeah. So again, another 15-minute conversation to say, is this worth me going forward with?
Right.
Or if I've had very little in the past, but I'm getting ready to start investing a lot of money in R&D, what should I be doing so that's easy to track? So when we get to the time to prepare the credit, Like, all the hard work is done. Right. Exactly. So again, it's the whole Stephen Covey thing, right? Begin with the end in mind.
There you go.
Yeah.
If anyone needs help with that bookkeeping, we would be more than happy to help with that.
That's right. Exactly. And you and I were talking about this before the podcast. I mean, accounting is literally the fundamentals of everything in business. I mean, I was even thinking about this the other day. You know, every business is judged by its profitability. I mean, this is what drives enterprise value. This is what, this is what people buy when they buy a business, right? It all goes back to accounting. And I would get, I'd have people probably, bring up and, argue with me and, mention, I mean, well, what about intellectual property and a really great product idea and a killer customer list and all these other things? Like, yeah, but all of that usually results in profits, which are accounted for, which are seen on your P&L, which means if you do not have a solid P&L, how much is your company worth? What are you really building here?
Right.
I mean, this is your biggest, I always feel like it's really strange to me when people don't invest in your biggest asset. Your business is your biggest asset. I mean, you're likely banking a lot on this. Well,
and a lot of business owners don't think that way or even see their business as an asset. And I say this as someone that deals primarily with smaller businesses under 5 million in annual revenue typically. So I'm dealing with usually solopreneurs or a few employees, and they're not thinking of their business that way usually.
Yeah.
So it's interesting talking to them in those terms where you almost see this light bulb go off. Like it never even occurred to them that they were growing an asset. Mm-hmm. It's a different way to think about business.
It is. And I think I attributed this to I like to think that they're on the hamster wheel. We all are as business owners. I mean, we're just on the hamster wheel. We're just constantly doing stuff, right? It's more revenue, more problem, operations, more employees. I mean, that's how it goes, right? Very rarely are these business owners get off the hamster wheel and go do some actual strategic planning to say, I want to go from point A to point B. How am I going to get there? And pull in a team of advisors and resources. I spend a lot of time with my clients on this, is really talking to them and coaching them. Let's talk about the top priorities this year that move our business forward, that drive that value, that handle, and address all of our initiatives that will get us to be more profitable, help us to reach our personal and professional financial goals. That's the name of the game here. So that strategic planning is the key. Step back for a while, a few times a year, and think bigger. We got to get to the point where we can dream a little, what I mean? But you can't do that when you're trying to send proposals and, you got a fire drill happening with a client or, there's a million things happening in everybody's business.
There's a book called The 4 Principles of Execution where he talks about the concept of the whirlwind, what he calls the whirlwind, which is the stuff that happens in your business every day.
Yeah.
And basically, instead of resisting it, just know that you're going to have the whirlwind every day.
Yes.
But his assertion is that you should still spend 10, 20% of your time towards your really big goals.
Absolutely.
And whether that be planning or strategy or income generating activity, whatever that is your goal for that day or that year, that you're still spending at least 10% of your time on that. Knowing that, yes, 90% of my time may be just dealing with the whirlwind, but I still progressed forward.
Well, I think also some of it is as though you said, they should spend 10 to 20% of the time working on their goals. Mm-hmm. A lot of times, business owners haven't even mapped out what that goal is.
So maybe that's where you start.
Right. What's your intention? I've asked this question before. What do you want to do? We had a client come in for a strategy setting meeting, and I made them write. It was 3 of them, and I had them write down on a piece of paper and answer questions for me about where they saw their business in 3, 5, 10 years. They all had a different response.
Wow.
They weren't even aligned. I mean, you talk about you're working on your goals. I mean, one of them's going one direction. The other one, we're not even rowing in the same direction here.
Oh, boy.
So it was very enlightening. And by the end of the session, it was like they had discussed it, hashed out why that was not a good plan, why this was a better plan, and that they were headed in a direction. And it has improved their business significantly.
That's amazing.
It's crazy. So, the first thing is you got to be intentional.
And I would say if you're starting a partnership, the discussions you should have when you're starting a partnership.
Yes.
So it sounds like that exercise that you do really should be done at the very beginning before the partnership is established.
Oh yeah. And then, make sure your legal documents reflect reflect that too, right? The spirit and intention of the goal and contributions and who's going to do what and when and how, and 100%. Yeah. You need to be on the same page so you're headed in the same direction. Otherwise, where are you going? I tell people this all the time. It's like, okay, I want to go to Home Depot. I go open my Apple Maps and it tells me, go north and then, for a mile and then take a right and boom, I'm there. But if I just get in my car and start driving, before you know it, I'm like, hey, I'm at the California Pizza Kitchen. I was trying to get to Home Depot, and you're just wherever you ended up, not where you wanted to go.
Right.
So,
no, that makes sense.
Yeah. We have to actually kind of plan things out a little bit. That means getting out of the whirlwind, right? So tornado be gone, and it's time to actually spend some time thinking about where we want to go.
That's good. I like that. And even with tax planning, I would think that applies, because if you know where you want to end up at the end of the tax year, and presumably you would want to have the money saved up for whatever you're anticipating at the end of the tax year. Tax planning goes a long way into that at the beginning.
Yeah, 100%. Lindsay, I'm so glad you brought this up because, here we are right around the April 18th deadline this year. And for the majority of our business clients, we make them go through tax planning at year end. So they know exactly what they owe before we even get to the deadline. They know what they owe in December.
Really?
And we're forecasting, and it's an estimate, but we're usually pretty close. And so they've got 3.5 months to prepare for that cash outflow. They know what's coming. And
that's fantastic.
Right. So instead of, 4/15, oh my gosh, I had no idea I owed that much. What's going on? It's more like, hey, it's just a reminder. We told you back in December, this is what you should be planning for. Yeah. Okay, got it. And it's a non-event. Tax season does not have to be stressful. It does not have to be ridden with panic, and you don't have to fret about anything. If you do proper planning, it is a breeze.
That's great. But I wouldn't say rare. I can't make that assertion. But I have heard complaints of people in that exact situation that you described. Come April 15th, they didn't know until that day what they owed, and then they're in panic mode because they had no idea it was going to be that much.
Yeah. And it's kind of hard to believe. If you're a high income earner, if you had a big transaction, if you sold your house and you had a huge gain, if you sold some highly appreciated stock, you have a general inkling, you know what I mean? Like, I got a lot of money in my bank account. Like, this is really awesome. You got to be feeling that. I know people, people do have short-term memory problems, like they might forget, but, If that is your situation, you should be, at least saying, hey, I'd like to have a conversation before you're in so I know what that number looks like. And I also can be asking the question, is there anything else I could do to reduce those taxes? Because once year end passes, there's a few things that we can do, to change the past, but, our options become more limited. And so it's just one of those things where, call up your accountant and have a conversation and schedule a meeting and pay for it. It's worth it to try to identify ways to reduce your taxes. Every dollar you send to the IRS, you get no return.
That's right.
You don't get a thank you note. You're not going to get some additional benefit later. It's just gone. And it's most importantly gone from your business where you could be using it.
Yeah. No, you're absolutely right.
Yeah.
That's good. I really like that.
Yeah. Tax planning is really important. And I think that, the accounting plus the tax planning really does, plus, the strategic advisory services really does equal to enterprise growth and accomplishment of your personal and professional financial goals. I think that recipe exists for all business owners. I think there's an investment required in each of those things. You have to find the right people to help you, the right team. You got to find somebody who's going to help you on the routine accounting side. You have to find somebody on the tax side. You need good advisors, mentors, good business people.
Yes.
People who are smart and savvy.
Right.
People are going to help you think about things you haven't ever thought about before. Like, how should I price this? Is there a better way to price it? Can I have recurring revenue? How do I standardize and scale in my business? There are so many business things to learn. Outside of books, there's so many people who want to share that knowledge. They've been successful. So create an advisory board. Get this business, turn your mom and pop shop into a world-class business.
That's good. I like that. Now, you have a pretty unique story that I'd love to share with listeners because, of all things, you went into marketing, right?
Yeah, that's where I started. So I have a degree in marketing, and you'd say, well, how are you a CPA, right? So
that's not very common to have somebody start in marketing and then end up in accounting.
Yeah, it was kind of it's kind of one of those things where I was always really good at math. I loved math. But definitely was not going to be a scientist or an engineer because I have no spatial reasoning skills. Do not ask me to back into a parking space, okay? Unless there's a camera, and maybe it does it for you.
Okay.
So I started taking some accounting classes in college, of course, and I loved listening to the professors and the career counselors who said, if you get more accounting hours, then you'll get a better job. And, I had my mother in my ear, you got to get out of school, you got to get a job. So I said, okay, well, I'll get a better job. So I'll do more accounting. And then I just loved it. I just really, really enjoyed it. I loved the process and the theory. It just resonated with me. So I did every possible accounting class I could at UT. And then I had to enroll in a community college at the same time and get special permission to start pursuing all this. And when I graduated, I was just a few hours short, and I went to work as an internal auditor for Bank One.
Oh.
Yeah, which was a really interesting experience. I had been a bank teller all through high school and college, so banking just seemed comfortable to me. And I learned a ton at working for the bank. But I worked for CPAs and the internal audit department. Right. And so they kept inspiring me, motivating me. Excellent role models, amazing women who really kind of guided and directed me at the onset of my career. And they said, you should go back to school, get this, go study for this. And I mean, it was hard, but I passed it on the first try.
Wow, good for you.
Yes. And so then I decided to go into public accounting. And when I arrived at a very, very small firm where it was me and another partner, I didn't even know what a trial balance was. I knew nothing about accounting.
Oh, how funny.
Except for what I learned at the CPA exam and what I learned in college. And so it was a complete eye-opener. So
I can imagine.
Yeah, I think it's really interesting, though, because maybe I didn't have the same experience as like someone who started off at Big Four with a lot of formal training. I've had to sort of learn a lot of stuff on my own and how it all kind of fits together. And sometimes I think that that's what makes me unique is that I've had to approach things completely different than most accountants. Just it's more of a bootstrap type thought process along the way. It's not someone teaching me like, this is how you were a CPA and this is how, it's just me putting my own sort of spin on things as I've been sort of progressing along in my career.
So has it benefited you now owning your own firm to have that marketing experience?
Oh, yes. I love it. I mean, it's actually interesting because for the first time and, since I graduated from college, I'm actually using my degree a little bit more. I really love that stuff. I think there's so much to share as a resource. I mean, that's one of the great things about being a CPA is we have a lot of intellectual capital, right? We have a lot of knowledge. We can be a resource in our community to business owners, other individuals, other professionals. We can have conversations like this and it can be fun. And so to me, marketing is really about us being able to take all that we've learned and share it, and make those businesses and individuals better than when we found them, So that's really how I think about it now. But I do love working on this side of the business. I still keep my accounting and tax hat on sometimes. Yeah. But I love being able to share a lot about how we've made a difference and our vision for how we can continue to impact people's lives.
So what was it that motivated you or propelled you into starting your own business?
Yeah, I did not. I got here all sorts of backwards. So, yeah. So, and I'm not founder of the MB Group. So I joined about 3 months after the company was started. So, I mean, it was basically the beginning. Okay. But it was the beginning of our accounting services kind of team that kind of grew there. And so I think it was when I first became an owner, I mean, I think that pride, that drive right there. But I do remember, my friends and family, like, are you sure you want to do this? This is crazy. But I feel like it's just been in me forever. And I think was when I really kind of assumed the role that I'm in now was about 3 or 4 years ago. And that's when everything was kind of a game changer. So there was a lot of ability for me to leverage sort of the vision that I had. I have a fantastic business partner who said, go ahead, Susan, just go. Just go. Yeah. And trusted me to kind of paint a different picture. So, I mean, in our firm, we've eliminated the billable hour. So we do everything on a fixed fee basis. We're value pricers. We are very focused on results, our core values, everything being true to that. So we're just a little bit different. I'm on a mission to, of course, be true to our core our core mission, our core business purpose, which is to transform the lives of our clients. That's how we make money. But along the way, we're going to transform our industry. I am certain that we will.
That's a lofty goal. It is. But if anyone can do it, it'd be you.
I appreciate that. And then, I mean, my goal at the end of the day is that we've transformed ourselves. So I think it's a process, right? So we will have gone through all these challenges and obstacles, and we will emerge, better humans, better moms, sisters, wives, all the things, friends, neighbors, better people, because of our ability to sort of go with that mindset.
And it seems like you have really great goals for your culture. And, obviously I haven't talked to anyone in your organization besides you, but certainly from hearing you talk about the culture, it sounds like you put a lot of emphasis on that.
Yeah. I think it's really important more now than ever. I mean, how many discussions have there been on, the Great Resignation and talent wars and talent retention? I want people to be so excited to come to work at our firm. And I think every company, every business owner really needs to start thinking that way. We have to. Otherwise, those really great people, they're going to leave. And they're going to go someplace else, or they're going to go start their own thing because they'll have more control over it. And so I think we have to be mindful of this. And especially in our industry, it has been laden with some very, there's stigmas, around, CPA firms and tax season and all sorts of things. And so, I think it's really important. We got to keep that top of mind. It's an important thing,
Absolutely.
We want a positive environment where people can grow, people care about each other. It's more than just debits and credits,
Yes, yeah. Absolutely. I agree with that. Love it.
Yeah.
Now, you mentioned that you're working on a book. Did you want to touch on that a little bit?
Yeah, we definitely can. So it's probably more of a booklet. Okay. I don't know if it's going to be a full-fledged book, but the idea is that there is, over the 20 years that I've been working as a CPA, I've worked with so many business owners of so many different kinds, from people who've sold their businesses for millions and millions of dollars to, the sole practitioner who struggles, all people in between. And so, over the period of time, I've fortunate to observe all the amazing qualities that sort of go into a business owner. And so I've kind of developed what I would like to think of as like a recipe. So bon appetit for accounting. And it's sort of like, these are all the qualities that a business owner has to have, whether that's, mindset or vision or a strong belief in their product or service, knowing their numbers. There's a long list. It's a long list of things that we have to embody, personify, live, be example for. It's almost like we have to be the pillar in our company and stand for all those things. I see that in so many of my business owners. But then there's sort of all this list of like instructions, right? So it's just like if you were thinking about a traditional recipe, it's like ingredients, and then here's your instructions. And these instructions that I've sort of been crafting are more geared towards like the accounting stuff, like don't try to do your own accounting.
I agree.
That doesn't mean that you don't, hands off, I don't have to know anything. That's not true. You have to be educated. You have to understand it. You have to use the information. But that doesn't mean you have to actually go into QuickBooks and do every single, code every single transaction. There's a real big difference in that.
That's what we are here for.
Right. Yes. Leverage these professionals, right? Yes. To do this work. They're trained. They know how to do it. You don't have to, there's limited oversight. There's all sorts of things, right? So I've got a lot of instructions, down to you need a budget, or create or develop a really awesome partnership with your accountant. You know, so like be a good client to your CPA. I mean, a lot of people don't think about that. They think, oh, I need a good CPA. But are you a good client to your CPA? So are you organized?
I have an episode. Now, specifically, I say don't get fired by your bookkeeper, but I think a lot of the principles I talk about there would apply to your CPA as well.
I would say I'm sure that they do. I'm going to have to go listen to that one because I'm certain that that's right. You know, there are just a lot of things like that, you know, sometimes...
that might be a good topic for us to talk about together.
Yeah.
Is how to be a good client.
And, you know, people don't think about this.
Yeah.
You know, but you know, developing that long-term partnership is, you know, communicating, responding. I mean, like, tax returns don't magically get prepared in a day.
Right.
It doesn't happen. You know what I mean? People can't prepare financial reports if you never send them the information.
Right.
I mean, we don't want to babysit people and hound you and pester you for information. You know what I mean? Just pay your bills. I mean, it's pretty simple. There's some really basic things here. You know what I mean? But really, all of it boils down to sort of this level of mutual respect. You know, I think sometimes CPAs view themselves differently. I think maybe because I'm the business owner, I think I'm business owner to business owner. And I feel empowered to help them every possible way. They're great at whatever they do, whether it's recruiting or, you know, selling, I don't know, whatever, you know, widgets of some kind, you know, and I'm great at accounting. And so I think when, you know, we have that level of respect there, I think it changes everything. And if they see us as business-minded, it changes the relationship.
Absolutely.
So find a CPA who is business-minded.
That's good.
Great if they're going to have all those other qualities. They're going to be excellent at tax planning. They're going to be great accountants. They're going to help you with all sorts of relationships, give you access to their network. I mean, there's a million things that the CPA is going to do for you.
That's good.
They've got to be business-minded.
So when your book is about to come out or does come out, we should reconvene and talk about drilling down on those ingredients and those instructions a little bit more.
Yes. And then I've got some chef secrets too.
Ooh, okay. All right.
These are maybe the things that are unrelated to accounting, but are still really important. But I couldn't not say them.
Okay. So there you go. There's the teaser. So if anybody wanted to reach you or the MB group, how can they find you?
Yeah. So mbgcpa.com. That's our website.
Okay.
Or you can send me an email, sbryant@mbgcpa.com. That's the best way to get in touch with me and check us out.
Thank you so much for joining me today. This has been great.
Yeah.
I really enjoyed getting to know you even better.
Yeah, super fun. Thank you for having me on, Lindsay.
Of course. And I'm Lindsay Klein with Klein, honest, accurate bookkeeping performed on time, and your host of By the Books. You can find us at sakline.com, sakline.com, or email us at info@sakline.com. Thanks so much for joining us, everyone. Until next time, have a great week, everyone.
By the Books is presented by Klein. Honest, accurate bookkeeping performed on time. For more information on Klein services or to get a hold of Lindsay, visit sakline.com or email info@sakline.com.
The information provided on this website and podcast does not and is not intended to constitute legal advice. Instead, all information, content, and materials available are for general information purposes only. Information provided by Klein may not constitute the most up-to-date legal or other information. Listeners should contact their attorney to obtain advice with respect to any particular legal matter and should refrain from acting on the basis of this information without first seeking legal advice from counsel in the relevant jurisdiction. Only your individual attorney can provide assurances that the information contained herein and your interpretation of it is applicable or appropriate to your particular situation.